Today on SCC, the crew give their thoughts on the latest industry headlines, and later they ask the question, what performs better, cards or companies? Coming up now on SCC.
Welcome to episode 29 of Sports Cards Culture. I'm Chris, here with Josh, Instagram at cardboard_chronicles, Kristina at Kristina's PC, Nick at Stiff Arm Wax. Lots of industry headlines this week. Several, in fact, broke on the same day. First up, according to Sportico, quote, Ken Goldin has sold Goldin Auctions to Collectors Holdings, a group owned by New York Mets owner Steve Cohen, hedge fund billionaire Dan Sondheim, and venture capital investor Nat Turner. Goldin remains with the firm and will operate Goldin Auctions as an independent business. Collectors Holdings will provide capital to expand Goldin Auctions capabilities. Josh, Ken Goldin joined us for around 30 to 45 minutes on The Crossover, our Instagram Live late night show on Friday nights. He spoke at length about a variety of topics concerning the sale of Goldin Auctions. We also analyzed the topic for some time afterwards, so it is definitely worth checking out. The replay can be found on the Card Ladder YouTube channel. Josh, what were your main takeaways about the Collectors Holdings acquisition of Goldin Auctions?
Yeah, that was a great episode. Really fun, impromptu guest from Ken. My main takeaways were that he was focused on, continuing to grow the hobby. I think, that's obviously his number one goal for his company, and something he's looking to do is get more collectors into the space, get more people buying cards. And he made it very clear that he was not leaving the hobby. A lot of people may have taken this news as him selling more and retiring or leaving or whatever. And he made it clear he's not taking on any cash in this deal, so he still believes in the hobby growth long term, and he's basically doubling down on that front. Other takeaways that it's becoming a little bit more corporate. We're having more businesses sort of eat each other up. Things are becoming more monopolized and more efficient on the business side of things, and we'll get into that more in the show.
We will. According to Bloomberg, Blackstone Group Incorporated agreed to buy Certified Collectibles Group, another blockbuster deal from last week. Certified Collectibles Group, or CCG, lays claim to housing the world's largest third-party coin grading service and the world's largest third-party paper money grading service. CCG also sets the standard for third-party comic book grading, and more recently has begun grading stamps and, of course, sports cards. Their sports card wing is called CSG, as I'm sure many of you are familiar with them, which stands for Certified Sports Guarantee. Blackstone valued the business at more than $500 million. Other investors include Roc Nation, which is Jay-Z's entertainment company, Daryl Morey, president of basketball operations for the Philadelphia 76ers. CCG's founder and CEO will retain a significant minority stake. Blackstone aims to boost CCG's growth, allow it to hire and train new employees, and develop its online presence. So, Kristina,
yes,
this year we have seen billions of venture capital dollars flow into the collectibles industry. As a collector, as well as someone operating a business in this industry, what does the arrival of enormous capital infusions mean for the future of sports cards and collectibles as a whole?
I think we're all a little concerned. Like, we're excited as a group of collectors, but at the same time, we are a little nervous about what this means with quote unquote outsiders coming in and spending a ton of money, and what that will mean for the hobby that we love. They all have shareholders, and they look at the bottom line for all their decisions. And I think that collectors as a group are excited yet kind of terrified of what that could potentially mean. And I know I am personally. I'm excited by the prospect of new money coming in. It means maybe like you said for Goldin, that they're going to infuse money to broaden some auction capabilities that Golden offers. I know Josh is excited about potentially a new website, but at the same time, I think we all need to just like temper that excitement and look at it realistically, but like not pessimistically, just realistically, and hold our comments until things start to happen.
Very fair. Can't get much fairer than that. Josh, same question to you. It seems like every month a new A-list celebrity is investing into the sports card and collectibles realm, and hundreds of millions more are invested. What does this portend for the future of sports cards?
Well, thanks for reminding me about my other favorite takeaway from the Golden appearance on Crossover was the website. I directly asked him about when the website would be updated, and he gave us an answer of about 2 months, so that was exciting. We all know how I feel about the current Golden website, so I'll just move on. I guess I would agree with Kristina mostly. The only other thing I would add is that as a collector, it doesn't really affect me too much, and it really hasn't in the last year, other than prices, going up. And it's like the actual rare collector stuff has actually been easier to find because more people are cashing out of it with prices going up. But it doesn't change like what cards exist in the past and what stuff I'm still looking for, and how I'm going about my business acquiring time and money to build up to some of these things. So it doesn't, I guess I'd rather, like you said, I'd rather react to the actual changes that are implemented as they're implemented versus like trying to predict what these companies are going to do. Because right now, money's just moving around. There's not really any actual changes with these businesses yet. We're sort of hoping that, hey, because this company's taking over, they have more resources, more money to infuse capital to, make things more efficient or hire more or make things better. We're just sort of implying at this point. So we're just sitting back and waiting.
I love that the two of you took it very literal and very practical. And I'm just going to supplement those takes with the symbolism of this. And to me, the symbolism is very strongly blue skies, very glass half full right now, that serious money is being invested into this industry. And it's clearly being invested, in my opinion, with the expectation of serious growth and of serious prosperity for years and years to come. I think that's generally the main magnet that attracts investment dollars to a particular space, is the likelihood and the forecasting of prosperity and growth and success. So practically, couldn't agree more with you guys. Symbolically, that's what I see. Josh first and then Kristina. If you'd like to chime in on sort of the symbolism of Jay-Z, Daryl Morey, Steve Cohen, these people coming in, the amount of money coming in, do you guys have anything to say about the symbolism of all this investment happening this year?
I do. It's about time, guys. Like, welcome to the party. We've just been here for hours waiting for you to show up. Like, come, like, enjoy the hobby that we all love. And that's all I have to say. Like, about time you recognized the greatness that is sports cards.
Josh?
Yeah, it's good for the long-term prospect of the hobby, the health of the hobby, because what we saw in the late 80s and early 90s was things didn't hold up because we didn't have the proper frameworks in place, the proper institutional things to support it long term. It was just like we printed a bunch and we didn't really learn anything from it, and we moved on. Whereas now there's a lot of, like you said, serious money, serious people coming in with real experience in business building, and not just like pumping out a supply of something and then leaving. So I would say just more of the long-term prospect of the hobby itself and people staying, and not just, pump and dump short-term, so, that's good, I guess.
Well said. Next topic. What performs better, cards or companies? With headline after headline about businesses being acquired and industry growth on the horizon, I could not help but wonder which investment has been historically superior, collectibles or the businesses that service the collectibles industry. Properly answering that question would require a level of research that exceeds the preparation time allowed for this show, but I'll present one data point that is amusing, if nothing else. Topps made headlines in April of this year. That's right, the Topps, the baseball card manufacturer, when it went public with a valuation of $1.3 billion. That was April of this year. Topps was taken private back in October of 2007 when Michael Eisner, the former CEO of Disney, acquired it for $385.4 million. That means that in between October of 2007 and April of 2021, Topps grew by a multiple of 3.38 or $915 million. By comparison, according to the Card Ladder database, in November of 2007, the 86 Fleer 57 Michael Jordan PSA 10, which is his rookie card, sold for $4,682. I would have loved to give an October 2007 auction, but there were none. On April 29th of 2021, the Michael Jordan Fleer PSA 10 rookie card sold for $414,544 at auction on eBay, which, what does that mean? That means that between late 2007 and April of 2021, MJ's Fleer rookie PSA 10 grew by a multiple of 87.54 or $409,862. Should be noted that since then, MJ Fleer's current market value is roughly $250K, but for the purposes of comparison here, I'm staying true to the April 2021 timeline. Okay, so when stacking up the growth of one of the hobby's most prestigious companies against one of the hobby's most prestigious cards, the card wins in an absolute landslide. Over the same 14-year span, MJ's rookie grew by a multiple of nearly 88 times, while Topps grew by a multiple of less than 4. On the other hand, if we look at the growth in terms of absolute dollars rather than rate, Topps increased in value by over $900 million over that period. That's more than 10 times the entire market cap for the 86 Fleer MJ PSA 10 as it stands today. This speaks to the fact that institutional level investment is looking for familiar ways to multiply large quantities of money, and acquiring businesses fits that bill better than cards. But make no mistake about it, hypothetically speaking, had Michael Eisner somehow found a way to allocate $385 million into the hobby's key cards back in 2007 rather than acquire Topps, his profits would be many multiples larger today. Josh, if Topps replicates its rate of growth, which is multiplying by 3.38 every 14 years, then it will be worth $5.2 billion in the year 2035. By comparison, if the 86 Fleer Jordan PSA 10 replicates its growth, then from April 2021 until 2035, it will be worth $36.3 million if it multiplies by 88 times over the next 14 years. Considering that sounds pretty ludicrous, let me also point out that if the 86 Fleer were to match Topps' growth rate, it would be worth $1.4 million in 2035. So Josh, what do you think is going to perform better over the next 14 years? Topps or the 86 Fleer Jordan PSA 10?
Well, I'm going to say the Jordan because the Topps requires a lot of things to go right for it to increase in value that much more. Once again, there's a lot of variables, there's a lot of people, decisions, leadership, all these different things. The Jordan Fleer, it is what it is. It's a collectible. There's a lot of people that want that card, and in 15 years, you just sort of look up and see where it's at. And I mean, it's possible that one flattens out for a while, and Topps gets strong leadership. I'm just taking into account all these different variables. Your point is well taken, though. The only thing I would challenge it a little bit is on the investment side of sports cards, you're talking about one wealthy guy buying a bunch of Jordans and then being more wealthy in the future versus buying Topps and building a company and providing salaries to lots of people, growing the economy. There's a lot more overall value that's given to the economy and the world, through these companies and what they're providing people versus one person owning the card. So I was just kind of throwing that out there as another thing to think about.
I agree. And when I was researching this, I was thinking to myself, was the total market cap for sports cards $385 million in 2007? If you even hypothetically wanted to, could you have spent that much money on cards as an investment? So that's another point worth noting. And the one you point out is definitely worth noting as well. Kristina, institutional level investors in the sports card industry are focusing on acquiring businesses of late, and there are many valid reasons for that. But there are also some investors who are building multi-million-dollar funds that are comprised of sports cards. Speaking strictly as an investor, what would you rather own? Sports cards or a sports card business? And considering that you are deeply involved in this industry as a collector and a business owner, you have a unique perspective on this question.
So in this hypothetical, am I me or am I just a rando who has no cards to begin with?
You're you.
So I have the option of buying more businesses or more cards?
You could take it that way.
I'm going to be greedy and I'm going to say, keep your business. I got mine. I want your cards though.
Okay. Good enough. and going beyond thinking as an investor,
Yeah.
which is more fun?
Cards.
Than
No, I'm kidding. I don't know. That's hard.
It is hard.
I love my job, so it's hard.
And this speaks to Josh's point about there's other things that businesses provide besides their investment and their return on capital. It's fun. It is
Yeah,
fun.
I mean, like, cards are fun. Like, I get to look at my cards, but, like, I don't know. I don't really get up in the morning and think, like, how can I serve my cards today? Whereas, like, I get up in the morning and I think, like, how can I help members of Card Ladder today? So
Yeah. That's kind of the point I was making, right?
Yeah.
Because like it provides you as an individual and the company and all the people around you a lot of value.
yeah, it also, like, I mean, everyone knows I love cards, but it also gives you, like, a higher purpose.
It does. Good. This is a really interesting topic. Josh, I have a similar question for you. Could you expand on the similarities and differences between collecting cards versus owning a business? And from an investment point of view, are you able to pick one or the other?
Oh, they're vastly different, man. One of them is extremely stressful, gratifying, challenging, and one of them is, so that's the business, and the other one is just like relaxing and, you know, it's a hobby, man. I mean, there's the word hobby is very intentional for what sports cards is. It's supposed to be fun. It's supposed to be an escape from your job. And the business side is it's just that, it's a job, right? It's a job that provides income to buy the cards. So I mean, it's obviously a lot more than that to us because we're so involved in the community and the hobby itself, and this business means a ton to us. I would say the answer to that question though is cards as well. I'm not trying to have multiple businesses. I can only focus on one thing at a time. My stress level is already high enough, and it's like the perfect stress level where it's like challenging and exciting stress, not like I want to run away stress. You know what I mean? And the cards are just all added positive.
Coming up on Sports Cards Culture, PSA reopens and reinstates its express service level.
Card Ladder, the best sports card app on the market. The future of sports cards is here. Card Ladder is the 21st century price guide and market analysis tool for sports cards. The best tools to help you track your cards. Watch the trends, stay informed, compare cards, and track the growth of your personal collection, all in one simple and intuitive platform. Join the innovators, not the imitators. The future is here. The future is now. Card Ladder.
You're watching SCC, Sports Cards Culture. Keep up with the crew and follow them on all the socials. Plus, join Josh and Chris and sometimes special guest Kristina every Friday night on Instagram Live. The Crossover.
Final topic for today, the other industry headline from last week. PSA reopens. PSA has reinstated its express service level, which costs $200 per card. Prior to last week, the cheapest service level available was Super Express, which costs $300 per card. According to PSA's complete through dates, all their express service level orders have been completed, which suggests that there is no backlog at the express service level, but it's not clear what the turnaround time is. PSA's lower service levels remain suspended for now. PSA seems to be experimenting with incrementalism. They are slowly introducing or reintroducing service levels one tier at a time, perhaps testing how much more demand they will receive rather than opening the floodgates all at once. Josh, what are your thoughts on PSA reinstating its $200 Super Express service level?
I think it's smart that they're doing one at a time. So, I don't second guess any of that. And I think that's good for the hobby as well, to not just open it up and have us be right back where we were. So I think that's going to be good for everyone. The thing I'm concerned about is it went from 150 to 200. Is that correct?
That's correct.
So I think to me that shows that they're all going to be increased in price pretty dramatically. And I don't know if that's good for the hobby. Like, it just, people are going to grade less cards. We're going to probably get them back at the same rate, of speed. So like the service isn't necessarily getting better because of that. I don't know. Yeah, I don't think that's necessarily going to be good. I just see that the prices are going to be pretty high on all of these service levels coming out. So people should have that expectation, because I don't think they're going to raise it by, what is that, like 33%? I don't think they're going to raise one of them and then not do the same to all the other ones. So we'll probably be seeing this like once every other month or every 3 months. They'll open one back up, the price will be higher, and we'll continue on. Excellent
observation. And it does concern me a bit as well. That is there ever going to be a way for people to economically grade $50 to $100 cards with PSA again? Maybe not. that day might never come. I remember a couple episodes ago we were talking about, well, will you ever be able to grade a card with PSA again for $100 or less? And like right now, I think it's like 50-50 on that. Okay. According to GemRate, the website, PSA graded over 736,000 cards in the month of June. 46% of the cards graded were from 2010 or later. 12% were from the 2000s. 25% were from the 90s, and 18% were 80s or earlier. By category, 38% of the cards graded in June were basketball, 26% baseball, 15% Pokemon, 12% football, 4% soccer, 2% hockey. And here are the 5 most graded cards in the month of June. The 1990 Fleer number 26, Michael Jordan, 2,700 copies graded, the most graded card in the month of June. The 1992 Topps number 362 Shaquille O'Neal rookie card, 2,400 copies graded. The 2020 Topps number 392 Luis Robert or Luis Robert. There is a disagreement about how to pronounce that. 2,200 copies graded. The 1996 Topps number 138 Kobe Bryant, 1,900 copies graded. And the 2020 Topps Chrome Luis Robert, 1,300 copies graded. Pricing information and trends on all these cards in various grades and their pop report growth over time can be found via the Card Ladder app. Kristina?
Yes?
Bearing in mind that the most graded cards in June were submitted many months ago because PSA is working through its backlog, what does it say to you that the top 3 most graded basketball cards in the month of June are from the year 1990, the year 1992, and the year 1996?
Well, first off, I want to just say I'm a little confused because I read a few articles during PSA's shutdown that said Pokemon was the reason for PSA shutting down, and yet Pokemon only made up 15% of the cards that they've graded thus far.
I'll say this about that. This 15% of the cards graded in June are Pokemon.
Right.
And the cards that are being graded right now are probably mostly bulk submission order and lower service level cards, which means they're probably grading cards right now that were submitted in October, November, December. So the flood of Pokemon cards those articles we're discussing happened in like February and March, and the onslaught of those cards was so enormous that was the one that was the straw that broke the camel's back here and that made PSA shut down.
Okay. I'll wait for those numbers to come back.
Okay. You sound skeptical. I don't know. I think that would be the explanation.
Okay. We'll wait for the February numbers to be released then.
But my question is...
Yeah, no, your question is about 90s basketball cards being 3 of the top 5 cards graded. So I think that it means that people are re-entering the hobby. And that's what I would like. I look at these numbers and that's what I think. I think that people have found their collections and they've either sold them raw or they've graded them. And that's what we're seeing here. People who bought them raw from someone who rediscovered them, or re-entrants into the hobby who finally graded their childhood collections.
That's an interesting take. And I think because we are looking at, because we personally know how delayed bulk submissions are, because we have several
Yes.
and we know when we submitted them. And you can also look at PSA's complete through dates. So we're still dealing with many cards that were sent in during what was a bear market for sports cards, which was like October and November of last year. The market was down at that time.
A bull market where people were still under lockdowns. They couldn't travel. They couldn't go to restaurants, and they started digging in their basement for things to do. And lo and behold, they found their sports cards.
Yeah, right.
That's my conjecture.
And so I think it's a valid observation or theory. And I wonder...
It's more of a hypothesis because it's not yet proven.
Right. Or valid hypothesis as well. And I wonder what will happen. What was being submitted in that crazy spike in like January and February and March?
Supposedly Pokemon.
Maybe Pokemon. Okay.
So do we know what caused the Pokemon surge? Is that Logan Paul? Or is there
I'm sure he played a role.
Point to at that time?
I'm sure Logan Paul played a role. Maybe Josh would be able to speak to this one better
Josh
than
was on
us.
the news about
Josh
Pokemon.
was
I think
definitely
Josh
on the news
was
about
the
that.
reason for the Pokemon surge.
Of course.
There we go.
The local news, yeah, that'll do it. It was definitely the Logan Paul stuff, and just like a bunch of influencers got into it. There was that whole like guru guy who got like in trouble for selling that resealed box. There was just like a lot of publicity around Pokemon around that time. And can I answer that question on the 90s stuff?
Yes, please.
So that's like the junk wax era, and then it started to become valuable in PSA 10 form, 6-8 months ago. And like literally everyone, myself included, went into their binders, their boxes, and pulled out all those cards and sent them all at once, because all of them were now justified to be graded, and this like massive flood of cards just started coming at it. It's insane that you're pointing out that it's like all the same cards over and over, because those weren't gradable. They weren't worth anything to be graded, a year ago, but now they are. So here they come.
Love it. That dovetails very nicely with my final question of today's show for Josh. So Josh, when we talk about that junk slab era, which is today, we are generally referring to the 5-figure population counts of base cards for modern rookies. But it turns out that the junk wax era of the late 80s and the early 90s would like to have a word. Because nowadays, card grading is an institutionalized part of the hobby. It's normal for a card to go from pack to PSA, but that was not the case during the junk wax era, which means many of those cards just were never graded. And it seems that the explosion in prices that Josh was just referencing for junk wax era cards, such as the most graded card in June, the 1990 Fleer number 26 Michael Jordan PSA 10, which sells for north of $300. This has brought out hordes of these cards, like Josh was describing, from closets and shoeboxes across the world. So here's my question. When the dust settles after PSA has graded its multi-million card backlog, will the hobby post-junk slab era, will the hobby be better off or worse off?
Well, I can tell you one thing: the environment's going to be a lot worse off, because that's a ton of plastic to be ingested by Earth.
Yeah.
The hobby, I think we're going to look back on that and just see it as like a total anomaly, where there was like this short period of time where this, the very high print cards were worth something, and then we sort of like experimented with it. We graded a ton of it. We realized there's way more of it than we thought, just like we did with the junk wax era, where it just like became very apparent that there's a ton of it. And now it's becoming more apparent because we're seeing it through the population reports. There's just so many 10s, and it's like, guys, there's a ton of this stuff, and there's just too much for the market to hold it up at these prices. And it's just, I don't ever really see it returning to this insane level because of how much there is. And those PSA 10s, it's not like they're just going to start, getting lost in people's closets. Like their 10s are in the system, right? They've been logged now. We know how many there are. And so I think we're going to look back and just say, like, man, that was a crazy junk slab era. Let's get back to, assessing population reports, understanding rarity, scarcity, collectability. All these things are going to start coming back. And that's kind of where we're at right now, is we're starting to relearn all these fundamentals that we knew before. We just had this little blip in the radar for this crazy stuff. So the overall hobby long term, it's hard to say. I'd probably say better off for it because we're becoming more educated.
Yeah, and it's when you're shopping for a card on eBay, or you're browsing display cases at a show, or you're on an alternative marketplace like MySlabs, most times there is no population information because it's all totally up to the seller. And so you don't know what the population of the card is. And so
why it's good to double check your information on your cards at cardladder.com.
That's where I was going with it. That's one of the things that we've always prioritized at Card Ladder when you're looking at any of the thousands upon thousands of cards that Card Ladder provides a wealth of information about. One of the things that is displayed prominently is the card's population report, and then a second auxiliary feature to the population report feature is you can see how that population report has changed ever since we started logging those figures. So, market cap as well, which is a very, very important number that paints a very different picture than just thinking about one card in isolation, irrespective of its population, and thinking about its market price. All right. We covered a lot of ground. That's going to do it for episode 29 of Sports Cards Culture. See you guys next week.
Thanks for watching. Tell us in the comment section below what the crew should cover next week, and don't forget to subscribe. See you next time at SCC, Sports Cards Culture.